Hello friends, my name is Behroz. I'm a finance executive by profession and welcome to my channel where I share with you how you can go about achieving career and financial success. Now in today's video, we will talk all that you need to know or should be knowing about TFSA and how TFSA can make your money grow 2.5 times. 2.5 times. So whatever you invest, you are able to grow it by 2.5 times in 15 years or less than 15 years. So I will explain all of that. It is one of the best instrument in Canada for you to get wealthy. Now let's talk about what is TFSA. TFSA is essentially an account or a saving account, which stands for tax-free saving account, which the government of Canada has provided you in order for you to invest in that account. So you contribute in that account. Whatever you contribute in this account, you can use it to invest and grow your money. And whatever growth comes on this money is tax-free. Here's the issue with Canada, which is the tax rates are very high. So whatever investments you do, whatever capital gains that happen on that investment, you have to pay tax on it, which is a lot of burden on your financial wealth. And hence it puts a strain on your financial growth. However, in this account, whatever you contribute in this account and use it to invest, there is no tax on that capital gain. Essentially, it is an account. Just like you have a checking account at the bank, a saving account at the bank, it is just like that another account that you can open either with your bank or with your broker, an online broker that you use for trading purposes. So you can open this account with them. And any money that you contribute in this account, you can use that money to invest further. And all capital gains that happen in this account on the money that you've invested are tax-free. So you don't have to pay any tax for the money that is in this account. How beautiful is that? However, as I said, there are certain limitations and we'll talk about them. Before going into the limitations, let's quickly talk about the eligibility. You have to be 18 years and above. Secondly, you have to be a tax resident of Canada. So even if you made your landing recently, like you immigrated to Canada, you still have to wait 1 year before you file your taxes. Once you file your taxes, only then you are eligible to invest in the TFSA account. Before that, even if you are present in Canada, even if you started working, however, you've not filed your tax return just because, let's say you came in November or December of the year and you've not filed your tax return because tax return are filed the year after, in that case, you are not allowed to contribute in this account. So you have to first file in your taxes. Once your taxes are filed, the government of Canada lets you know what is your contribution limit for that year and for the years before. Now, if you are an immigrant who just landed, that means you don't have any history. What that means is that since you don't have any tax filing history, hence you don't get any contribution from the past. You only get the contribution room going forward. Now, this contribution room currently is around $7,000. It used to be lower than that, and it keeps increasing based on inflation. What it means by $7,000 is that up to $7,000 you can contribute to the TFSA account in any given year. And this contribution room keeps increasing. So let's say last year my contribution room was $7,000. That was my first year when I filed my tax return after I turned 18. Then the next year it will be another $7,000. So now my contribution room, if I didn't contribute anything last year or this year, in total is $14,000. So in 2 years time, I can contribute $14,000. If I don't contribute anything next year, assuming the contribution room is again $7,000, now I have $21,000 worth of contribution room. So this contribution room keeps adding up as the years pass. However, it is better to take advantage of contribution earlier in your life, earlier when you're young, so you get benefit of the compounding on this account, because the earlier you invest or contribute in this account, the earlier you can invest that money. The earlier you invest that money, the more return you can generate on that money, and hence your path to financial freedom, your path to getting wealthy. Now, what do I mean when I say you can contribute in this account, but that money can also get invested? So just like your saving account, when you put money in your saving account in the bank, you can't use that money to be invested somewhere else. However, in case of TFSA, when you contribute money in this account, you can direct that money to be invested into the stock market. So you can buy stocks, you can buy GICs, you can buy bonds using that money. And as you buy stocks, as you invest in the stock market, you get returns from the stock market. for two primary reasons. One is because of dividend, the dividend that the stock may be paying you, or the interest that you might be earning on whatever investments you've done. And second is capital gain. So whatever stock you bought, when it grows in value, you gain some money as well. And all of this, as I previously said, is tax free. You don't pay any tax on the dividends, and you don't pay any tax on the capital gains as well. Now, apart from the contribution limit every year defined by the Government of Canada, there is also a maximum contribution limit, which currently is $95,000. So currently the contribution limit for every year is $7,000, and in total the investment that you can do in the TFSA account can go up to $95,000. Now, the total money in the TFSA account can be more than that, just because you invest $7,000 and it grows. However, your investments in total, which is every year when you invest $7,000, cannot go above $95,000. So $7,000 plus $7,000 and so on and so forth cannot go above $95,000. What this essentially means is that you can max out your TFSA contributions of $7,000 each year up to 14 years. Now, the $7,000 as a contribution room every year also keeps growing based on inflation, and the total value, which is the $95,000, also keeps growing based on inflation. So we can safely assume that by the time it is 15 years down the lane, this $95,000 worth of contribution limit will go up as high as $120,000 based on the normal inflation rate, and the $7,000 will become something like $9,500 of contribution room in 15 years time. So if I am to assume that this contribution room keeps growing based on inflation as it has done in past, and the total lifetime limit also keeps growing, and you keep maximizing your contributions. Like you start with $7,000, and every 3 years we can assume that the contribution limit per year increases by $500. Then by 14 years, or within 14 years, your wealth will increase by 2.5 times. So whatever you invest, you will make it to go up to 2.5 times of that investment. Here in my calculation, you can go and invest up to $120,000 in 15 years, which will grow to become $270,000 by the end of 15th year. So you have essentially invested $120,000 and it has grown to $270,000. So more than 2.5 times increase in your wealth just by maximizing your contributions in TFSA. Why? Because all the capital growth that comes on this investment is tax-free. And mind this, that essentially in the long run, you start making your wealth more because of the returns that you're earning as against the principal amount. Because over time, the returns will exceed the investment that you've done. This is just how compounding works. Now, let me quickly talk about the best thing I like about TFSA, which is that you can take out this money anytime you want without any penalty. And your contribution limit room is not lost. Let's take an example. You invest $7,000 in 1 year, that grows up to become $10,000. The next year you invest another $7,000. Now this is $17,000, and that the total money grows up to become $20,000. Now you decide you want to buy a car, or you invest in a house, or whatever it is. So you take out this $20,000 at the end of second year. Once you take out this $20,000, you have to pay no penalty on it, and all of this $20,000 you can just take out without paying any tax on it. You take out this money, you use this money, and in year 3 you decide you want to go and invest back into the TFSA account because the purchase that you made, either you didn't make the purchase or now you have extra $20,000. You can simply go and invest back those $20,000 plus the $7,000 contribution limit that is created in year 3, because every year you get $7,000. So essentially you can go back and invest $27,000 back into the TFSA account. So essentially speaking, you didn't lose any contribution limit. Rather, you invested $14,000, you took out 20, and then you can put back $20,000 because now your new contribution limit is not $14,000 anymore. It's $20,000 because you took out 20 and you can put back $20,000 in the TFSA account. Now, last but not the least, you cannot over-invest in the TFSA account. If you over-invest in the TFSA account, there is a penalty because the government doesn't want you to enjoy tax-free benefits on any amount more than the contribution limit. So in case you by mistake invest more than $7,000 or whatever the contribution limit is for that particular year, or the total contribution limit that you have, take that money out because otherwise you will be paying penalty on that money. It is somewhere around 1% on monthly basis, which is a huge penalty. So avoid that. Thank you for watching this video. Hopefully this video helped you get clarity on the importance of TFSA and how it can help you grow your wealth. In case you found value from this video, I'm sure you'll find value from another video on my channel where I make a comparison between different kind of saving accounts that the Canadian government is offering, including the TFSA. So TFSA, RSP, RESP, DCPP. You can check it out. Other than that, I've made another video where I explain how you can choose between whether to lease, buy, or finance a car. You can check that video out here. Thank you.